Hello, friends. With income tax return filing dates approaching, we appreciate that many taxpayers are little confused about one issue, that is whether to go for new scheme of taxation or new regime or continue with old regime. This video is an attempt to explain those things. And what I feel that the process of decision making is very simple. If you go through this video, you yourself will be able to decide whether which scheme is beneficial to you. Let me share my screen with you. Give me a second for that. Yes, friends. And the topic that I am going to discuss is based on the provisions of the Income Tax Act 1961. And to be very specific, I'll be talking about Section 115 BAC 1A. So this section, in fact, talks about new scheme of taxation or new regime of taxation. First, let us understand that what is the difference between the old regime and the new regime. On the screen, I'm showing you the tax slabs. That in the slab rates, we choose on the left-hand side, you can see I have shown the old regime, what is the tax rate applicable. And on the right-hand side, you can see the new regime of taxation. A different slab rate is applicable. Old regime, if you look at up to an income of 2.5 lakh, no tax is required to be paid. I'm talking about an individual HUF and certain types of assets. And this discussion is specific to assessment year 24-25. Okay, which is the relevant assessment year, right? That means financial year 2023-24. Whatever income is earned during the financial year 23-24 is to be assessed to income tax in the assessment year 24-25. And in this assessment year, this is the tax rate under old scheme up to 2.5 lakh, no tax. If the income is exceeding 2.5 lakh and up to 5 lakh, for that slab tax rate is 5%. Income in excess of 5 lakh up to 10 lakh will be subject to a tax rate of 20%. And the total income exceeding 10 lakh rupees, the tax rate applicable is 30%. So three rates are applicable. 5%, 20%, 30% under old regime. That means if someone is having an income of 15 lakh, first 2.5 lakh slab, he is not going to pay any tax. On above that 2.5 lakh, up to next 2.5 lakh, that is from 2.5 lakh to 5 lakh, he has to pay 5% tax. And above 5 lakh, up to 10 lakh, he has to pay 20% tax. Above 10 lakh, that is from 10 lakh to 15 lakh, for that part, for uh, that income of 5 lakh rupees, he has to pay tax up to the rate of 30%. Plus, in addition to that, he is required to pay a 4% on the tax amount that is called health and education cess. Plus, surcharge also in certain situations he has to pay. So, this is the old slab rate. If you come to new scheme, you can find out up to 3 lakh, no tax. Above 3 lakh, up to 6 lakh, 5%. Above 6 lakh, up to 9 lakh, 10%. Above 9 lakh, up to 12 lakh, 15%. Above 12 lakh, up to 15 lakh, 20%. Above 15 lakh, it is 30%. That means if your income is above 15 lakh, whether you opt for a new scheme or old scheme, it doesn't matter. Under both the schemes, for that part of income, tax rate applicable is 30%. But in between, you can find out certain tax slabs where under new regime, tax rates are lower. For example, if you go for that 3 lakh to 6 lakh slab, you can see tax rate is 5% under the new regime. Under old regime, it is 5% up to 5 lakh. But above 5 lakh, it will come to 20%. Above 5 lakh, it will come to 20%. So one can compare like this. There are certain tax slabs where new scheme offers lower rate. Right. So now one question might be coming to your mind that new scheme is offering lower rate, then one should naturally opt for new regime. But the problem here is that the definition of income or the meaning of income changes under new scheme. Under new scheme, relatively less deductions are available. That means for computing the total income, we apply certain deductions. Under old regime, there are more deductions. So roughly, if you say there are around 70 deductions under old regime. A new scheme, very limited number of deductions, exemptions are available. So consequently, the taxable income under new regime will be more. Income will be more, but tax rates are less. Whereas under old regime, the taxable income will be less because of application of deductions, etc. Income will be less, but tax rate will be more. Rate of tax will be more. Therefore, we need to compare that which particular regime is beneficial to a particular taxpayer. Comparison will be easy. We'll be learning that. Okay, so I think we have understood broadly what is the tax slab. This tax slab also is available on the Income Tax Department's website. You can check it. Now, few more things we also need to appreciate at these days. That certain deductions, certain specific deductions levels tell you, first of all, if you are a salaried employee, salaried taxpayer, all salaried taxpayers enjoy one deduction called a standard deduction of 50,000 rupees. So if you are talking about for this particular assessment year 2024-25, standard deduction is allowed both under new scheme and old scheme. So both the cases. Suppose someone's income is, let us say, 10 lakh rupees. Under old scheme, standard deduction of 50,000 will be available. New scheme also 50,000 will be available. So effective income will be 9,50,000 in both the cases. Now, salary taxpayers and other taxpayers also enjoy one benefit of professional tax. If professional taxes are paid or tax on employment is paid, then that is a deduction allowed from the total income. But this deduction is allowed only under old scheme, not allowed under new scheme. This is state-specific tax, varies from state to state. Roughly, it comes around 2,500 to 5,000 range. From state to state, it varies. So that tax, which is paid, if you're opting for old scheme, that deduction will be allowed. Income will be reduced to that extent. New scheme, that is not allowed. Now, one more important issue is that relief under Section 87A. This is a relief. This relief says if you're opting for old scheme, then up to 5 lakh, if your income is up to 5 lakh, your total tax liability will be relieved. That means you need not have to pay any tax. Here, one taxpayer or assessee gets the benefit of around 12,500 rupees. If you compute what is the tax liability on 5 lakh income, it will be 12,500 rupees. Entire tax will be exempted. No tax is required to pay. This is a relief. On new scheme, this relief amount is more. The relief amount is up to 25,000. Meaning if someone is opting for income of 7 lakh rupees, then he need not pay any tax if he's opting for new scheme. Practically, if someone is a salaried employee, his income is, let us assume, 7,50,000. So 50,000 rupees is the standard deduction. His effective income, net income is 7 lakh rupees. He need not pay any tax. Right. Under slab rate, tax may be payable, but Section 87A will give you a relief up to 25,000 tax. But the moment income exceeds 7 lakh rupees, then he has to, this relief is not applicable. He has to pay normal tax as per slab rate. Similarly, under old scheme, if the income exceeds 5 lakh rupees, even if it is 5 lakh and 1, then he has to pay tax as per slab rate. In new scheme, even if the income is 7 lakh and 1 rupee, he has to pay tax as per slab rate. Right? This relief is available only when the income does not exceed 5 lakh rupees under old scheme and 7 lakh rupees under new scheme. So these three important things, I think I have made it clear. Now let us make a broad comparison between these two schemes. First of all, you see, old versus new regime, let us compare. Under old scheme, you see certain key benefits are appearing on the left side. First of all, deductions under Section 80C. So many taxpayers make certain investments in life insurance premium, national savings certificates, provident fund. All these investments are eligible for deductions. And under 80C, there is a maximum cap There is a cap. Maximum amount is allowed under here, under this particular section is 1,50,000 rupees. Taxpayers claim these deductions. So this deduction is allowed only in only in old scheme, not allowed in new scheme. Second benefit of old scheme is that HRA. Many salaried employees gets HRA, house rent allowance. House rent allowance is a deduction. How much deductions is allowed? It depends upon certain things. First of all, how much rent you are paying, what is the HRA you are receiving, how much rent you are paying, how much rent you are paying in excess of 10% of your salary. There are certain limits, whether you are staying in a metro city or a non-metro city. On that basis, certain deductions are allowed. Okay, in fact, there is a formula. You have to calculate that what is the HRA, how much rent you are paying in excess of uh, 10% of your salary, then 50% of salary if you're staying in metro city, 40% of salary if you're staying in non-metro city. So these three limits are there. Lower of that thing will be exempt. Remaining part will be taxable. That exemption is allowed only in case of old scheme, if you're opting for old design. Similarly, leave travel allowance or leave travel concession. Some employees get this benefit. This is allowed. This benefit means this is a kind of deduction. The employees are valid twice in a block of 4 years. But this LTA deduction is allowed only under old scheme, not allowed under new scheme. One more important thing is the NPS. If employee is contributing towards national pension scheme, he can claim an additional deduction of 50,000 rupees. I am talking about employees' contribution towards an NPS. In that case, that 50,000 rupees deduction is allowed only under old design, not allowed under new design. One more important thing is that housing loan or home loan interest. If it is a self-occupied house, the home loan interest up to rupees 2 lakh rupees normally employees claim. That is allowed only under old scheme, not allowed under new scheme. So these are some key deductions you have seen. But if you look at, if you talk about the advantages of new scheme, first, you have also understood that tax rates are lower. Lower tax rate is the chief advantage. Second is it involves less compliance. You don't have to keep the record of all these investments. Third advantage is that you have already seen the tax slabs. Tax slabs are wider. And one more benefit is that up to an income of 7 lakh rupees is tax free under new scheme. So there are certain advantages of old scheme. There are certain advantages of new design also. Therefore, a taxpayer need to take a careful decision which scheme is to opt for. Now, friends, I am showing you certain key deductions which are not allowed under new design. Some of them I have discussed right now, but again, let me recapitulate. First of all, you see ATC deductions up to 1.5 lakh, not allowed under new scheme. Similarly, health insurance premium, it depends. If it is for self up to 25,000, if it is for the parents up to 60 years, over 60 years of age, then 50,000, or for general checkups, medical checkup, 5,000 rupees. These deductions are allowed under old scheme. Under new scheme, this health insurance premium related deductions are not allowed. Similarly, self-occupied home loan interest up to 2 lakh rupees, not allowed under new scheme. Saving bank interest, that is section 80TTA. So taxpayer gets a deduction of 10 up to 10,000 rupees. That is not allowed under new scheme. All that I'm talking about, these are not allowed under new scheme. One need to be careful. Interest for senior citizen, section 80TB, up to 50,000 rupees is allowed under old scheme, not allowed under new scheme. Leave travel allowance twice in a block of 4 years, not allowed in new scheme. If certain donations are made to charitable organizations, deductions may be 50%, maybe 100%, depends upon who is the donee. So on that basis, this deduction 50%, 100% is allowed under old scheme only, not allowed under new scheme. Similarly, own national pension fund contribution up to 50,000 rupee deduction is allowed under old scheme only, not in new scheme. Then for disability of self or dependent, a deduction of to deductions from ranging from 75,000 to 1.25 lakh. This deduction is not allowed. HRA exemption, as I had discussed, that is also not allowed under new scheme. Some key items we have noted, these are not allowed under new scheme. Now, friends, let us make a detailed comparison. I have made an attempt to include maximum number of deductions. You can see old regime and new regime are compared here. One by one, you can see which is allowed, which is not allowed. On the right-hand side, new regime, if it is cross mark, that means it's not allowed. You see, this is, first of all, 87A relief. We have seen old regime, 5 lakh is the limit. Up to 5 lakh rupees income is tax-free. Under new regime, it is 7 lakh. Standard deduction, 50,000, 50,000 under post scheme, it is allowed. Right. So effective, if someone is a salaried person, his effective income under old regime is 5.5 lakh. Under new regime, it is 7.5 lakh. This much of income is there. No tax is required to be paid. So that means effectively 87A relief under old scheme is 12,500 rupees. Under new scheme, it is double, 25,000 rupees. HRA exemption, LTA, and other allowances deductions are not allowed under new scheme. Just have a look at the screen. Standard deduction allowed under both the cases. Entertainment allowance or professional taxes. These deductions are not allowed under new scheme. One more slide I'm showing in comparison. You see what are the things which are not allowed. I'm not reading it line by line. Just go through it. Home loan interest is not allowed under new scheme. ATC deduction is not allowed under new scheme. ATC deduction means provident fund, life insurance contribution, children's tuition fee, all these things are not allowed. Employees' own contribution to NPS, not allowed. However, employer's contribution is allowed under both those things. Employer's contribution to NPS. Medical insurance premium under Section 80D, not allowed under new scheme. For disabled individuals, deductions under Section 80U, not allowed in new scheme. Educational loan interest is not allowed under new scheme. Let us see some more items. Here you see. Interest on EV loan, electric vehicle loans, not allowed on new scheme. Donation to political parties or charitable trusts, etc., not allowed on a new scheme. Saving bank interest, either Section 80A, 80B, not allowed. Chapter 6 deductions, not allowed. Okay, when you are seeing tick mark on the both the columns, old or new, that means it is allowed under both the schemes. Just have a look at this slide. I am moving to next set of comparison. You see, exemption on voluntary retirement, exemption of gratuity. You see, these are exemption for leave encashment. These are allowed under both the schemes. Daily allowances, these are allowed on both the schemes. Okay. So after that comparison, let us learn two more issues. First of all, one important thing which is applicable mostly to HNIs. That is reduction of surcharge. Surcharge is a tax on tax. Okay. This surcharge rate under new scheme is reduced from 37% to 25%. But this surcharge is applicable only to individuals whose income is exceeding 5 crore. If it is within that, then we need not bother about this surcharge reduction. Then one thing is the leave encashment. Many employees are eligible to encash that leave. There is a statutory amount that is up to 3 lakh rupees, it will be exempted. But if someone is opting a new scheme, that the limit is not 3 lakh rupees, it is 25 lakh for non-government employees. So non-government employees can encash leave up to 25 lakh and that will be accepted. So these are the basic comparison of new tax regime with old tax regime. Now, considering all these deductions and income, if someone is asking, then what is if my income is this much? Whether I should opt for old scheme or new scheme. Friends, you see, it depends upon your total income as well as deductions applicable to you, deductions relevant to you. So this chart, an attempt is made in this slide. This is for salaried employees, persons who are having salaried income because they get standard deductions and all. So this on the, you can say the x-axis or in the horizontal axis, deductions are there in the scale. And in the y-axis, that is on the vertical axis, you can see the total income. Total income, it shows that on which situation new scheme is better, which situation old scheme is better, in which situation it is indifferent. That means old scheme, new scheme, it is same, effect is same. This can be used as a quick reference only. These charts are also available in internet, but can see. But actually, one need to compute it in detail. But this can be used as a quick reference. This is for salaried class people. Just have a look at this chart. You can pause the video and watch it. Now, for people who are not having salaried income, that means other than salary income, for those people, this chart is relevant. Here also, same way, x-axis shows deductions, y-axis shows the total taxable income. And one can quickly see if his income is this much. For example, if his income is, let us say, 9 lakh rupees and his deduction is 2,50,000 rupees, then you can say 9 lakh rupees, 2,50,000 rupees, old scheme is better. Right. If deduction is up to 2,37,500, then it is same. If it is 2,12,500, the new scheme is better. So like this, one can compare. This will be helpful. You can again pause the video and refer to this chart. Finally, one more thing, let me tell you that this is relevant for exercising the option. Please remember that if someone is a non-business assessee, let us say he is a salaried class person, then he can exercise the option of moving from old scheme to new scheme before, or new scheme to old scheme before the due date of filing of the return. If he's an individual, due date of filing return is 31st July. So before that, one can move from new scheme to old scheme. Okay, by default, system will take it as new scheme. But if someone wants, he can come to old scheme before the date of filing of the return if he wants. Next year also, he can change it. From year to year, he can change it. But in for business cases, if someone wants to move to old case, he has to file a form that is 10 IEA. This has been notified. He has to file. And for this business classes, this option of moving from old to new to old is allowed only once in a lifetime. Okay, please read the note. In case of income from business and profession option, income business and profession, the option to switch to old tax regime and withdraw the option in any subsequent assessment year is available only once in their lifetime. Therefore, this business assesses or assesses for having business or professional income has to be more careful in selecting the method. Okay, so broadly, I have covered many things, but one more thing I can also tell you that if you want to calculate your tax liability, what is the old scheme or new scheme? So you can do one thing. You can go to Income Tax Department's website. I'm showing you a tax calculator, which will be helping you to calculate. Just give me 1 second. Let me explain you. Let me stop sharing this screen, and I'm going to share one more screen right now. I'm now taking you to the, you see, Income Tax Department's website. That is www.incometaxindia.gov.in. I'm taking you to this site. This is the homepage of Income Tax Department. This will help you to compute uh, your tax liability under old scheme and new scheme so that you can decide. Now, if you look at the screen, I'm taking you to this particular place. You see tax information and services. Here is a tab, right? Then you see under this tab, there are tax tools, and here is a one more link, tab tax calculator. I'm clicking here tax calculator. You see one calculator is opened before you. So try to use this calculator. There are other calculators that are also there in the site which can compare old scheme and new scheme, but I feel this calculator is more convenient. So first of all, select the assessment year. And assessment year is that year in which your income is going to be assessed. Suppose you have earned income in the financial year 23-24. Assessment year is 24-25. Here it is to be assessed. So let me check here 24-25. Select the kind of taxpayer. Let me assume it is an individual. The moment you click it as individual, you see a new question is popping off. That is whether you are opting for Section 115 BSc. Section 115 BSc is a new scheme. First, let me say no. That means I don't want to opt here. I'll go for the old scheme. Let us see what is the tax liability. Then choose whether you're a male, female, senior citizen, anything you can choose. Let me select male. Residential status, I assume a resident. Person is not non-resident or not ordinary resident. Then all that you have to do, you have to find here the taxable income. Taxable income is after deduction. For example, someone is, let us say, having taxable income of 12 lakh rupees. Okay. And let us say he's having deduction of 2 lakh rupees. So taxable income is 10 lakh rupees. 12 lakh minus all deductions. So 10 lakh rupees. Let's say I'm putting 10 lakh. 10. Just click enter. Your tax liability is computed. You can note down. This is your 1,17,000. Okay. So base tax is 1,12,500 on that thing. Health and education says 4% of 1,12,500 is 1,17,000. Okay. Now, if you want to go for old new scheme, then what you can do, whether opting for this thing, 115 BAC, just make it new, make it yes. If you're making yes, then you see, now you see your taxable income may be more. It may not be 10,000 rupees. Because your income is 12,000 rupees, deductions are under old scheme, it is allowed 2 lakh rupees. Here might be 50,000 rupees. Suppose I'm taking now 11,000, 50,000, 11 lakh 50,000. Now, if you enter, here you see the tax liability. It is coming 85,800. That means new scheme is better. So okay, this is the tax calculator, which will be helping you to compute your tax liability. And this, with the help of this calculator, you'll be able to decide which scheme is better for you. I repeat, go to incometaxindia.gov.in, use this tax information services tax calculator. Okay. Now, friends, you have understood that whether to opt for new scheme or old scheme, it largely depends upon the kind of income you're having and the kind of deduction which is applicable to you. So hope with the help of this video, you'll be able to decide that which scheme is good for you. Thanks a lot. Thank you very much.